Hi everyone, this is Ali Hussein Kasim from Ali Talks Tech. In this week's roundup of tech news across Africa, we are covering a couple of stories. The first one is an interesting report on digital farmer services in Kenya, or DFS. We'll also dwell a little bit more into Visa and Mastercard's efforts around mobile money in Africa. I will look also at the rise of what I call FinTelcos, which is related to the Visa Mastercard story. We'll then go to Nigeria, where the Nigerian government is expanding the eNaira into procurements. That is definitely an interesting conversation to have. And then we'll look at Google's report on the digital opportunity in Sub-Saharan Africa. So let's look at the Digital Farmers Services report by the Bill & Melinda Gates Foundation in Kenya. Some key issues to take home about. First, 56% of Kenyan farmers actually use digital financial services at least once in the last season, the Masika season as it's known, 2023-2024. Information advisory is one of the most common uses of DFS in Kenya, followed by inputs and equipment, searches and buying and so on. However, there's a low usage generally of digital market access, and that alludes to e-commerce for agriculture, which is 8%, only 8%. Credit, which is sort of a bit surprising for me, considering how mobile credit in Kenya has become so prevalent, only 8%, and then insurance 2%, which is sort of aligns to the insurance penetration rate in the country. However, there's an important question that we must ask ourselves. These three key areas: low usage of digital market access. I mean, the supposition that digital and online will open up market access for farm products and inputs, only 8% are using that. Access to credit, only 8%, and insurance, only 2%. These are key action points that we need to start looking at as a country. The other issue is there's no significant differences between usage of DFS in digital farming or farmer services between genders or between smartphone users and other users. One other statistic to look at or to consider and think through is that subsistence farmers are much less likely to use DFS. Obviously, there's an issue of cost here, access to connectivity, access to smartphones, and so on and so forth. Which brings me to the point where there is a huge, high unmet demand for DFS, especially on information and access to finance, advisory services, credit, insurance, and so on. One of the key barriers is lack of awareness or perceived high cost. I'm not sure whether it's perceived because the issue around cost of getting online is still a big issue, which sort of alludes to the fact that there is definitely a huge opportunity, and this report highlights both the progress and challenges in DFS in Africa. I am hoping that policymakers and players across the industry will use such an interesting and important report to tackle some of the key pain points that this report has brought about. We now move to Visa and Mastercard, who are intensifying their efforts to capture Africa's mobile money market. I think here are a few facts that we need to really internalize. Africa is 1.4 billion people. Less than 20% use digital payments or digital money. So there's still a huge potential. And that penetration that we are seeing has mostly been done through mobile money. 4 key players in Africa that are worth mentioning, that have a wide network across the major, not just major fintech markets, but major markets across Africa, from tier 1 countries like South Africa, Kenya, Nigeria, Egypt, even to tier 2, tier 3 countries. Mobile money is playing a key role. These 4 key players, M-PESA Africa, which is a joint venture between Safaricom in Kenya and Vodacom in South Africa, is definitely the elephant in the room. Followed very closely by MTN MoMo, or MTN Mobile Money. And after that, there's Airtel Money, which has dominance in certain markets. And then we have Orange Money, which is dominant in Francophone Africa. Here are the key battle zones for Visa and Mastercard: partnerships and collaboration. In the last couple of days this week, we have seen signing of major partnerships for Mastercard and Visa with M-PESA Africa. Remittance focus, merchant payment focus. Very interesting times. If you come to my home country, despite the prevalence or alleged dominance of M-PESA, we still not there yet when it comes to digital money. We are still operating between 15 to 20% of the digital payments in this country. 80% is still money, cash, or in the Kikuyu language, fari. So the focus, everybody is focused on the market that has already been conquered. How about the 80% that the players haven't conquered? And this focus on mobile money is quite interesting and not surprising, considering the fact that card payments, card issuance in Africa is still not double digits. It's, single digits. In places like South Africa, mobile money, MTN is trying to push for mobile money, but they are yet, to get anywhere. I was in Cape Town a couple of weeks ago, and the driver picked me up at the airport. Excuse me, sorry. The driver who picked me up at the airport, I asked him about mobile money. His answer actually surprised me. What is mobile money? Like, what do you mean, what is mobile money? You don't know what mobile money is? I said, no, I have no idea what you're talking about. So I explained it to him, and he's like, look, the banks work here. My bank account works, so why would I need mobile money? That's a question that MTN would need to answer. So this space, mobile money, Visa and Mastercard, battleground in Africa is going to be very interesting to follow. Yesterday, I did an infographic on the players across Africa of mobile money, and I call them the FinTelcos. And you can see how these guys are playing in this space. But even despite the dominance plays in the different countries that these guys are playing, my sense is that we're just starting to scratch the surface. So we'll be talking a lot more on the impact of mobile money in fintech in Africa in the coming weeks. We now move to Nigeria, where Nigeria's government is expanding its eNaira payments for procurements. This is very interesting. CBDCs, or central bank digital currencies, have become pretty controversial over the years that they have been launched. A lot of the hardcore crypto guys are just saying this is going nowhere. And the fact that central banks across the world are using the same playbook to get CBDCs out in the market. Goes to show you maybe there's something that they just simply don't understand here. Guys, one of the key things across the crypto market is these crypto exchanges play a key role. So if you are not part of that channel, if you are not engaging and using these crypto channels to actually expand the CBDCs like the eNaira and the ECD in Ghana, it's going to continue to be a niche play where governments now decide, we will pay you if you are procuring, or if you have a tender in government, will pay you via an eNaira or ECD. As we say in Kiswahili, itabaki tu huko. It will just remain around there. So I think one of the key areas to start thinking about is expanding the distribution of these CBDCs into the mainstream ecosystem of cryptos. I look forward to that happening sooner rather than later. Now we come to the last conversation, which is around the digital opportunity in Sub-Saharan Africa. And let me just say a caveat, according to Google. Google has commissioned through an organization called Public First in the UK. I think every year or every 2 years they do this, and they analyze the digital economy in Africa and the impact in the region, obviously through the lens of the Google ecosystem. So here's some statistics. Number one, every $1 invested in digital tech is estimated to return over $2 for the region's economy by 2030. Google's tools and services grew Sub-Saharan Africa's economy by an estimated $16 billion in 2023. I'll have to actually drill down into those numbers properly if I get a chance. 9 in 10 YouTube creators agree that the platform allows them to share their creativity and culture. However, boss, Google, start sharing the wealth banner. Some of us have been on YouTube for a couple of years now. Sijaona tandururu. No, seriously, guys. Let's find a way to spread the wealth and let Google be a little bit more transparent in terms of how that wealth is spread. Irrespective of how small my channel is, I am contributing to the global ecosystem of Google. Can we start seeing some shillings coming in? Lastly, a 1% increase in internet connectivity is associated with a 5.7% increase in GDP. This is interesting. And I think, honestly, this is a wake-up call for governments across Africa. This Google report is very interesting and very important. But can we have these reports that are not jaundiced through the eyes of one of the big tech players? I'm sure if TikTok or Meta with Facebook and Instagram and WhatsApp comes up with their own economic reports for Africa, it will be very different. Let's find a way to bring all these things together, and let's have a more objective report around the digital economy across Africa. With that, ladies and gentlemen, I come to the end of our weekly roundup across Africa this week. Asanteni sana. Looking forward to seeing you guys next week.